Hello to you and welcome to another super quick lesson on wealth management bite size. My name is Sunana Bisht and I'm a financial advisor with a leading financial institute of the country. And today we're talking about life insurance, or more precisely, the riders that we have on life insurance. If you have seen the previous video on life insurance essentials, you would know that I advocated life insurance should only be bought with basic version and you shouldn't be looking at riders that are added to it. It's not that the riders are not good or the riders are not beneficial, but the fact that the riders might not be the correct rider for you or the correct condition that you need to buy it for. So my suggestions to my customers and clients and also to you would be to look at the life insurance rider which makes the most logical sense depending upon your lifestyle and depending upon your family conditions before you go ahead and select that, and that should be over and above your basic insurance. So let's discuss few of the most common riders that are currently available in the insurance market and make a little sense out of them. Accidental death rider. This is a rider which can be bought above your normal life insurance, and it is a payout that's made to the family in case of an accidental death of a person. Now, this death could be due to any sort of accident whatsoever: a plane crash, a car crash, a motorcycle accident, an accident while traveling, an accident at any point of time. This is an additional payout to the family by adding this rider into your insurance. It does not mean that if the death is because of natural conditions, you will not get paid out anything at all. Your basic insurance will still get paid out to you, but in case the death is because of an accident, there will be an additional payout here. It does increase the premium policy that is currently there. So your premium will increase whenever this additional cover is added. Some accidental riders also cover possible disabilities that might arise out of the accident, but make sure that you read your options and conditions very carefully and correctly while looking and selecting your rider in this case. Otherwise, for people who live a lifestyle which has higher likelihood of suffering an accident, there's personal accident insurance policy, which is completely different and covers a much wider possibilities out of an accident. Maybe that's a standalone policy you should be investing in. Check out our other video on personal insurance accidents to understand it a little better and see if it will be applicable to you or not. Permanent and partial disability. This is again a rider which can be brought over and above your normal insurance. It talks about disability due to an accident and due to only accident. It does not cover a disability out of disease, out of any other conditions. So make sure this is something that gets covered in case your job requires you to be in a situation where the possibility of accidents are much higher. If you are somebody who does a desk job, very less likelihood of you being involved in an accident, then probably this is not something that you need to be paying extra premium over. The policy also pays out periodically for 5 to 10 years. It's more of an income generator because of disability. It is possible that you might lose your day job, and this is a security on top of your normal insurance that can be provided, since your insurance only provides in case of death. Critical illness rider. It pays a lump sum amount at the time of diagnosis. It is very essential in case there are high likelihood, again because of genetic factors and your family's medical history, there is a possibility that you might have a critical illness at some point of your life, or there is high likelihood that you have that as well. Now, this will help over and above your normal health insurance in case you have a health insurance. you don't have to wait till the demise of the person for the family to get that money, because a lot of time families get into tough financial situations due to hospitalization. So this kind of a rider actually helps the family while the hospitalization bills are piling up. All the major illnesses are covered under this rider. Has a very basic list which is quite long and inclusive of every major illness that you can think of. The base policy after the illness is detected could be termed or continued depending upon the kind of policy that you've bought. So make sure that you're reading those terms and conditions very carefully before you sign on those dotted lines. It is also possible that whatever lump sum that has been paid out to you at the time of diagnosis gets deducted from the actual amount that will be paid at the end of the term, that's at the end, at the death of the person. So that difference would be made, and making sure reading all conditions in your document is the most important factor, irrespective of which rider you buy. Waiver of premium rider. This is a very important factor for people who don't have secure jobs or who are running their own businesses. Entrepreneur, it's not an established job as yet, or the financial security is not enough, but you really want to still uh, experiment with your source of incomes. Now, this policy will cover your premiums. This rider will cover your premiums in case of loss of income or disability. Your policy will stay in force, because the second your premium it doesn't get paid, your insurance company will null and void your policy. So that's a very good safeguard against getting your policy cancelled. So a non-payment premium would terminate the cover, and make sure you not get into such a situation. This rider would be helpful. Income benefit rider. This policy or rider helps in generating a regular income, which is an additional payout which happens for a year between 5 to 10 years. It's an additional sum which is paid besides the lump sum amount that is there for the policy holder. But this also means that the premium amount that you're paying for this rider and your insurance is much higher. So see what condition you are in financially before signing up for this rider. See if it actually makes sense having a higher premium amount, or would it make sense to invest that money somewhere else and get same kind of returns in 5 years or 10 years. Make those decisions very carefully. That's it. Those are the major riders that are currently available in the financial market that can be added to your basic life insurance policy. I will advocate again, go for a basic version of life insurance. You do not need to have all the riders attached to your life insurance. Make very good judgment calls based on the reality of your lives when you're adding these riders, because the premium is accordingly calculated and it will have a huge impact on the amount of money that you will be paying to the insurance company because of riders that might not even at any point of time be applicable to you. Okay, thank you so much for your time and listening to me today. We post our videos regularly on mutual funds, insurance, income tax, and other wealth related topics. Please subscribe to us and share our videos with those that you care for. Thank you once again.